Hi, thanks so much for tuning in. This is Profit Insights on NDTV Profit. I'm Alex Matthew, and with me in studio is Mahima Vajrajani. We live in a world where opinion is usually polarized. And so the opinion on AI goes one of two ways. Either you believe that the technology will be massively transformative, or you believe that it is overblown. But when speakers like Ashwath Damodaran and the IBM CEO weigh in, you stop and take notice. What are we talking about? And why are we talking about it today? In an interview, Mahima, just a short while back, Ashwath Damodaran, this is now somebody who a lot of people pay attention to because of his insight into valuations and several other things. Right. He said something that was very interesting. And I'm actually going to quote from this interview that he did. He has essentially said that the big difference between the dot-com boom and bust and the AI boom, we don't know whether there'll be a bust. History suggests that there will be a bust. The dot-com boom and bust had no huge capital expenditure in that cycle. In fact, there was very little traditional capex or even R&D driving it. People started apps. They basically started going on it. This is a direct quote, so that's exactly what I'm suggesting. We should actually pull that up while I'm speaking about it. This has been the biggest infrastructure run-up I've ever seen in business. You can go back and compare it to the automobile business 100 years ago. The amount of money that's being put into AI capex is immense, which means that when the correction comes, the pain will be more intense. And what exactly is he talking about with regard to the pain? He's saying that the dot-com boom and bust was almost entirely equity funded. But the bust, when it came, those shareholders lost 60%, 70%, 80% or 90% of their money. You felt sorry for them, but the loss was restricted to shareholders. The problem with the AI capex boom is that not only is it immense, but a big chunk of it is funded with debt. And the debt is coming from private capital rather than banks. There's a very real chance that if there's a correction and companies start having problems, that problem is going to show up as distress and default, and that really doesn't stay restricted. It spills over to the rest of society as well. So that's one aspect, Mahima. And I realize that I've been speaking for a while, but there's also something else that stood out very recently. The IBM CEO making a statement talking about the amount of capex that's required per gigawatt. He's talking about for hyperscalers, $80 billion that's required. So you say for 100 gigawatts that's required, you will have a requirement of $8 trillion.
Correct.
And just for them to pay the interest on that, they need profits of $800 billion.
Yeah.
Where is that going to come from?
Yeah.
That is the question that we're going to ask to our guests today. In fact, we've got joining us right now, Mr. Venkatraman Narayanan, who's the Managing Director and Chief Financial Officer of Happiest Minds Technology. We will also have Mr. C.P. Gurnani, who is a co-founder and vice chairman of Aonos, joining in. But first to you, Mr. Narayanan, just your initial thoughts on what I've described and what Mr. Ashwath Damodaran, who's an intellectual juggernaut in the space, right? What do you make of what he's saying?
When Ashwath Damodaran speaks, you jolly well listen to it. That's my view, because I've been following him for quite some time, including the most recent article that he wrote, a large one at that, on the valuation of SpaceX. Can you hear me?
Yes.
Yeah. So including the valuation of SpaceX, he had given a valuation of something between 1.2 to 1.4 trillion, if I'm right. But, markets seem to have a mind of its own, and they think otherwise, including the way post-listing gains have accrued to that company. So, these are expressions of opinion, but one needs to really look behind those numbers to try and make sense of what Mr. Damodaran and the other industry participants are talking about. But if you look at it, AI, there are three layers. One is, the infrastructure layer. That's what seems to be driving most of the spend today. Then you have got the foundation layer. That's the Anthropics and the guys who are making software. And the third is the application, the enterprise application layer, which is essentially the companies who are building out their applications and real live software on top of the AI infrastructure. Put together, we are talking about numbers like 8 trillion, which really are mind-boggling. a return of at least 20%. Is give and take 20%. You should have returns of close to 1.6 trillion coming in on an annual basis. Is that kind of money being generated today? The answer is no. Is there a future for that kind of generation? If you look at it from an economic standpoint, efficiency bringing in gains, are you looking at such big numbers being thrown up? I don't think so. So where is the money going to come from? It has to come from various other adjacencies which people are talking about in terms of enterprise application efficiencies, spend on defense, and so many other areas. You're talking about this money having to come up from various parts. How is it all going to add up? I'm not sure. And we are talking about investment. The number of investment that I'm talking about is the top 10 or 12 companies in the world who are putting together this kind of expenditure, whereas you've got a long tail of people who are building their house on this infrastructure and on the AI theses. What's going to happen to them? Quite a few of those questions abound. Like Mr. Damodaran said, the simplest comparison right now in front of us is the .com and maybe the telecom boom. In the 90s, people were laying fibers, which never got lit up for a very, very long time. Maybe it took 20, 25 years. And the same thing is about the .com. You had pets.com and those kind of companies coming in, claiming huge valuations. But today, that's what drives business. Amazon is a child of the .com boom. And there are a lot of internet companies which are doing very well today. So the fundamental is in place, but the financial numbers behind it don't seem to be adding up, or at least to my limited understanding, they don't seem to be stacking up right now.
Rightly put, Mr. Narayanan, that there is a fundamental aspect behind it, but the numbers are not adding up. Let me also welcome in CP Gurnani, who's the co-founder and vice chairman of ANOS, joining us now. Mr. Gurnani, thank you so much, first of all, for taking up the time. We were just talking about what Ashwath Damodaran has recently gone ahead and talked about, AI and AI bubble, right? There are two aspects to it, right? One, he is saying that the kind of capex that we're doing behind it, there's a huge, gap between the revenue generation versus the capex that we're doing. And the second aspect is that the entire money that is going behind this capex is largely private funds and debt generated money, right? It's just difficult. Like Mr. Narayan just mentioned that, the math is not mathing as we speak. What is your first take on this? How do you read through what Mr. Ashwath Damodaran has, put together with regards to where AI goes?
The good news is Damodaran has also been proven to be wrong. So, Venkat just spoke to you about SpaceX. My theorem is very simple, that bulls and bears, they've always coexisted. And number two is, I don't know of any infrastructure project in my life. For a layman, think of a hotel. When you put in $1 billion to set up a hotel, you don't even recover your interest income in the first few years. Over a period of time, your revenue starts going up, and the property prices start going up, and hence you start recovering. Now, my personal feeling is, one is, look at the good news for the Indian IT market. That $8 trillion will be spent in technology sector is good news, number one. Number two is, if the adoption goes up to the level that it is anticipated, for example, if you were to look at the Indian market, we probably have 60 to 70 million MSMEs. If 60 to 70 million MSMEs start using AI, their productivity efficiency goes up. But the reality is, every infrastructure provider would also get a return out of it. So let's strongly agree that we can expand the market. And if we expand the market, we will be able to service the $8 trillion spend. In a short run, Mr. Damodaran could be right. But I think over a period of time, this infrastructure investment is required. We have seen it in the investments in the data centers. We have seen it the way India accounts for 20% of the India data produced around the world, and we will see it as a big wave, the data centers investments coming into India. So I am more optimistic.
Mr. Gurnani, good afternoon. This is Alex, and I just want to take that point forward. You make a very strong case. Having said that, something that a lot of people have commented on is the fact that there is a lot of connectedness in the way this capital is being provided and utilized, right? So a lot of companies are providing capital to other companies, and that's perhaps what was different from earlier massive capex cycles that you have seen. So there's a high degree of interconnectedness, and if there is a survival of the fittest that comes through in the next 5 to 7 years, and there are companies ultimately that fail, is there an issue with regard to others collapsing on account of that interconnectedness?
So, Alex, keep looking at the parallels. If you are talking only about the US, who is the dominant player of the e-commerce market? It is only one, called Amazon. Has that been able to do any predatory pricing? Has they been able to monopolize the market? No. And I understand NVIDIA investing in A, Google investing in B, Meta investing in C, and all of them seem to be, investing in each other to take control of the ecosystem. As far as I am concerned, there is more as a commitment to the industry than to read it as creating monopolies. And as far as I'm concerned, you're seeing three distinct patterns out there: Microsoft, Google, and Meta. You're also seeing a distinct pattern out there that NVIDIA wants to play a role in every part of the industry, whether it is the PCs, whether it is the gaming consoles, or whether it is the data centers of the future. So I strongly believe if there is a fight between the three principal players and fourth one, once in a while, Mr. Elon Musk making his bold statements, I think there is the only reason it is happening is because the market is expanding. It is not that people are trying to control the market.
An interesting point. Venkat, do you want to come in on this? Because ultimately you've just described the various layers, and you've talked about the hyperscalers as forming the base of this, right? And the infrastructure that is being provided. Is there a need to provide a distinction in the case of a worst case scenario, which a lot of people are talking about, to say that if companies do fail and those that are providing the infrastructure, putting money to work, massive amounts of money, will the guys who are sitting at the top layer of this entire chain be relatively better off, unscathed? Or is there a significant amount of capital that is also going to have to be deployed by these guys who are sitting at the top of the stack?
No, like Mr. Gurnani mentioned, this is an infrastructure project. And I believe fundamentally this technology is here to stay. And, it's going to impact all of us very positively. It's only the time scales that we are really debating, whether it is a matter of, 3 years. Valuation has always got to do with the time frames within which you can evaluate returns. There are three layers, like I mentioned. Each of them have their own time scale. So the infrastructure layer guys, the data center, the guys who are putting in the chips and all the other hardware behind this, they must be expecting returns in a X kind of time frame. The foundational layer guys, they are the guys who are going to be most susceptible here to obsolescence. In fact, just this is my own take. Today, everybody talks about Anthropic and OpenAI. perplexity is not talked about as much as it used to be. So you see people only give credence to the top one or two players in that space. So the foundation layer seems to be the one which is bereft of people who can say that we'll continue forever. Whereas the application layer, which is the guys who are making software on top of this, enterprise applications, they are if you ask me, the guys who run the excavators or the shovel guys. So they are going to be here for the long term. And like Mr. Gurnani said, the Indian IT industry, we are going to take, we'll come out hopefully better in the longer run from the whole AI, transition. The infrastructure guy has his task cut out. He needs to get his return on investment. Economically, there is going to be a lot of productivity gains. How much of that will get apportioned to the infra guys is something that we'll have to wait and see. The foundation guys are really building the rocket engines out there and the technology which runs the whole thing. How are they going to make the numbers work will be something that we'll have to see. Where SpaceX is talking about an addressable market of 28 trillion, out of which 26 trillion was on the application layer. So a lot of bets being placed on how AI will be adopted and how they will make returns. As far as the enterprises are concerned, they are really going to make maximum use of this to make sure that efficiencies are brought in from the word go. So returns for each of the layers are going to be different, Alex, to my mind. But the underlying fact is, this is one of those changes which is here to stay. Experts of yesterday need not be the experts of today, because people tend to make statements or talk about things that are happening in front of them with the wisdom of what has happened in the past may not work because the fundamental thesis itself is changing. So to that extent, like Mr. Gurnani says, there is going to be a AI boom. There is going to be AI bust also at the same point in time, but it will be in pockets. Who's going to get hurt? Who's going to benefit will be what we'll get to see the next couple of years, is what my take is.
Fair. So then, Mr. Gurnani, just to, take that point forward, because there are a lot of layers to it, right? And like he said, there's going to be a boom, there's going to be a bust, but, we'll have to kind of figure out as and when this happens as to who is going to benefit the most and who might lose the most. So then it brings us back to the question that we talked about hyperscalers as well, right? So how can India position itself in this game to probably gain the most out of it? That's one question, because Mr. Damodaran also did say that, it's not just 1 or 2 trillion. It could take around $4 trillion of revenue to kind of bridge the gap between the debt and capex that we are right now building up to build that entire AI infrastructure. So what is your entire view when you put this into perspective from an India point of view?
So one is, nobody is disputing Professor Damodaran's maths. So let's be very clear, we are none of us, and who are we to question that eminent professor of finance? What we are now questioning is our own belief that this is like any other good infrastructure project. When you build a bullet train, when you build an airport, when you build a new highway, you don't start getting returns from the day one. Usually the cycle is 5 to 15 years. So number one, does this apply to this infrastructure spending or not? Number one. Number two is that my own personal belief is that even today, IT consumption is limited to select few. Technology is being adopted to its benefit by all public services or private services, or by the companies that could utilize. So the potential itself is much higher. And as this technology is now becoming more conversational AI, more language AI, more vision AI, I think the adoption will increase dramatically. And that is why my belief is that Professor Damodaran is right, but he is taking a very aggressive stand. Number two, what it means to India. I think India needs to be clear about the role we want to play for the future. In today's environment, we are playing the role in the application layer. We'll probably start playing the role in the tokenization. We have already announced that we will play a role in language adoption. My personal belief is India needs to double up or triple up their R&D spend. The fact is that Google actually makes a lot of R&D investment through DeepMinds. If you look at OpenAI, which started more as a cooperative enterprise, the money that was going in was to create a new system. I think we have not taken that aggressive stand for India. India will benefit because of the tailwinds in the technology sector, but India can leapfrog if we start investing a lot more in the deep tech and taking a story forward. And we have seen some of these announcements in space. We have seen announcements in defense, deep tech. I think it's just a matter of doubling down and making sure that our deep tech investments go up by 100x, not just linear growth.
That's an important point that you raised. And to that end, it seems like the IT space in India has been playing catch up, Mr. Gurunani as well as Mr. Venkatraman, with regard to the spend. But you've seen some interesting headlines, right? You've seen the Sarvam deal, you've seen the fundraise, you've seen a frontline IT company step forward and say that they're going to participate in that fundraise. So there's seemingly a thought towards that end. Mr. Venkatraman, just a quick last thought, and CP, you can weigh in as well. Do you see more such deals taking place? And ultimately, the street, I think, is caught in two minds. One, they want IT companies to utilize the cash flows that they generate to be more acquisitive, to build out certain lines. But then equally, they're saying, when will the money come through? How do you think that Indian IT companies will perform that tightrope walk, in your opinion, in the near to medium term? First, Mr. Narayanan.
Yeah, like Mr. Gurnani again mentioned, we have a great role to play. We are part of this entire ecosystem of the application modernization and addressing the tech debt. With AI capabilities, we can go a lot deeper into what needed to be done, which never could be done. Just to give, the deeper you can go into a mine, the more you can excavate. It's a similar situation. There were areas of software, operations, production, finance, where we never could go into given the capabilities that we had. But now with AI, all of those become accessible. So the word that people use is tech debt. There is so much of that. You can get into a modernization with a lot more gusto than what we would have been able to do earlier. So to that extent, I think there is going to be a volume increase. As far as value increase, you are now going to do a lot more of higher end value added work. So there is going to be a value increase as well. So when value and volume increase, the service ecosystem that we are talking about, the Indian IT services, we are going to do okay. We should grab it with both hands. But at the same time, we are building this on the basis that the foundation layers and the infra companies will continue to do well. So it's important that they too do well. And despite Mr. Damodaran being a little critical about the financials, we hope that this continues to build out in the US, in Europe, in India, wherever. And that helps us build the base on, build the application on top.
You know what they say about good conversations, gentlemen? Time flies when you're having good conversations. Thank you so much. We're running out of time, and I have another guest that I want to ask about this. But thank you so much for taking the time. We really appreciate that you've spent time with us.
Thank you.
Sandeep.